Sorry, my voice is so screwed up. This is what happens each and every year after the conference. Let's make sure you can hear me, though, first. All right, cool. Welcome, everybody. I'm drinking water and tea and honey and all this stuff. I got my Ricola, so I'm going to go as long as I can. My guess is we're going to have to stop this after about an hour because it hurts so much. I'll do an extra long webinar next week when I'm better, but this is what happens with the conference. So you understand why we don't do more conferences, because A, it's a pain in the butt to travel there or wherever it is. B, I feel like crap after the end. And C, it's so damn expensive to put on. We don't even make any money on it. The only reason why we do these conferences is for you guys, because it's great for you to network and meet other traders and, learn. And I love meeting you guys, and I know my team does. So there are some benefits, but we can't do it more than once a year. It is insane. And I even slept in today, but just talking for 3 straight days, it wears on you, You guys like it? Those of you who came? I know some people couldn't make it. That's cool. But some people tuned in from all over the world. I think we had, 27 countries or something? Something crazy. I don't know. It's awesome. I truly love meeting you guys, and some of your stories are just so incredible, and I love hearing it. Like Woodtick 27. I don't know if he's in this chat room right now, but the man is coming up. New challenge student coming up on 250,000 in profits. Jane is up like 160,000. It's not just about making millions. If you can make 6 figures, that's pretty damn good. And you're on your way. So the final figure, I think it was around 600 people between online, or maybe like 650 if you include online. Excuse me, sorry. This is going to be tough. I wish I knew sign language. We could do a cooler version that wouldn't kill me. And if you couldn't come this year, we will do next year. We'll always do it. We'll always try and do it. But I know a lot of you guys are asking for like 2, 3, 4, 5 of them, and that's just not possible per year. It's a lot, not just on me, but on all the speakers. So I appreciate you guys thanking. People like Tim Brittani spent so many hours this year. He missed last year because he was getting married. Michael Good put in so many hours. Mark Crook put in so many hours. Maddie Triforce Owens. So many people. My team, Christine, Missy, Ben, Duvall, Doug, Ryan, Glenn, Zach. I mean, there's a lot of people that are to thank here, and they're not necessarily on this webinar, but I got to give them props. My team is awesome, and if you can do me a favor next time you talk to anybody from my team, just say thank you for all their hard work, because it's a good business, but no one would ever work these crazy hours and do as much as my team does unless you take pride. And this is what it's all about for us as teachers and educators, and for you guys as students. You gotta love what you do, and that way the time that you put in, while it might seem crazy to outsiders, it's really what separates you. The more time you put into anything. So when somebody comes up to me and says, "What's the minimum amount of time I can put in to be successful?" I should just walk away. A few people at the conference said that. I didn't walk away. I explained it, but you can't expect to do the minimum work and investment. What's the minimum number of hours I can put in? What's the minimum trading account I can have to make $1 million? Like, like it matters if you put in $500 or $2,000. Is that really going to affect your chances of making $1 million? No, it just tells me what your mindset is and how you want to slack on everything and cheap everything out, and you're not really serious. I came up with a great analogy, though, during the conference, and I'm going to go with it more. Some of you guys who didn't attend, I'm going to be talking about your knowledge account. So a lot of people get frustrated when you have like a small loss. You lose like 20 or 40 or 50 bucks. And what I tried to figure out, and I didn't plan this at all. I don't really plan. I just have too much going on, so I just adapt. What I came up with during my presentation is that even when you lose like 20 bucks or 50 bucks on a trade, you're still growing one account. Maybe not your brokerage account like you want, but you are growing an account, and that is your knowledge account. And you have to have a big knowledge account to grow your brokerage account. It's very rare to find someone grow their brokerage account without having a big knowledge account. And I'm gonna go so into detail on this. Thank God for this conference. I don't know how I came up with it. You know, I guess I'm gonna have to check the recordings of the conference, because there was a moment in time where it just clicked for me when I'm trying to explain how a small loss can be good, and people just don't get it because, you know, we judge everything based on dollars. If you make $20, it's a good trade. If you lose $20, it's a bad trade. And in reality, that's not true. Sometimes you make $20, you traded a random stock in a random pattern and random price action. It doesn't matter if you make money. Your knowledge account actually drops even if you make 20 actual dollars. And you're never going to be an actual dollar millionaire if your knowledge account keeps dropping. It wasn't during the round table. The round table was when I really was pushing it home. I think it was either the first or the second day during my speech. I think it was the second day. I'm not 100% sure. I gotta look. I didn't even drink. I didn't have one alcoholic beverage during my conference. It was pathetic. I have tea and honey and water. It was on, some people say Saturday closing, some people say Sunday morning. I don't know. I'll go back and look at the tape. We have it all recorded. We'll get the recording out to you guys too eventually. But I'm really grateful because the knowledge account out of everything that I presented really hit home for people. Anyways, let's talk about this stuff. Right now I am in NYMX, even though the markets are down. And there was some confusion on NYMX into the market close. You know, I make these live video lessons where I was filming it. It was like 3:10 p.m. Eastern. The stock was right here at like 375, 380, and I did not want to buy because it did not match up on my, you know, SSS. And I'm going to be talking about the SSS a lot right now, guys. So you better get, you know, on it. Let me see. Where is it? I have too many web pages open. Oh, here it is. Here is the SSS. If you go to Profitly/SSS, you can see this bad boy. Where are we? 8 minutes and 30 seconds. All right. This is a struggle. Hold on. Let me get a drink of water. One sec. Oh, fuck. I'm sorry that we had to do this webinar, but tomorrow I am jam-packed. Thursday I'm jam-packed. Friday I'm traveling, so I've got a crazy week. So we had to do the webinar today. Anyways, yeah, and also someone brought this up at the conference. There's no shorting on the SSS. I only talked about long setups. This is how ill-prepared I am, where I was working on it for months. I was trying to get the whole Trader Checklist DVD done before the Maldives, and I just forgot about shorting. Because frankly, I just haven't been shorting lately. So I got to do like I don't know how many more chapters I got to do on short selling, but I'll do them. Don't worry. It's not that crazy. But this is just to give you an idea of how overwhelmed I am. You know, some people don't believe it. Some people are like, sure, you're overwhelmed. Those of you who have been my students see my schedule, see the projects. I try to do as much as I can, but sometimes stuff just goes over my head. Let's talk about NYMX, though, real quick, because I want to talk about this before I forget it. NYMX, you know, the markets are down 1 to 1.5% today. NYMX is the single biggest percent gainer. It was also a big percent gainer here, and it had a nice follow-up. And right here, it was a percent gainer, and it had a nice follow-up. So usually what happens, and actually it had a spike here, and even though it didn't close at its highs, it was up a little to start the day the next day. And it had a spike here, and even though it closed red on the day the next day, it still almost retested the day highs. So out of what? 1, 2, 3, I guess you could say 4 big green days, 5, and then 6. So out of the last 6 big green days, it's had continuation. And even down here, you know, back in June and July, it didn't really have much volatility. I think it's fair to say the volatility really started in August. And it had a nice second day, continuation day on August 24th and 25th. Even though it came down, it proved that it had, you know, some staying power. So today I'm interested in it because the markets are down, this is up. It's proven that it can continue, but then the question is, at what point do you buy it? I totally missed the market open this morning. I slept in, and I needed it so badly. So I missed this whole morning spike. I know some people in the chat room nailed it, so congrats to you guys. I don't mind, you know, missing a play like this. It's not the end of the world. And then it was kind of choppy. You know, you thought that it was going to break out to new highs right here at like 10:30. I mean, you did get a breakout from 398 to like 408, but that's kind of a weak breakout, and you can consider that a double top. Then it tries to get back to 390 here, all the way from 340. So a nice 50-cent bounce, and it fails again. Then you get a midday attempt to 390 from 397 from 360. So you have another 40 cents a share spike, and then it kind of fades here. And so when I was doing my video lesson today at like 3:10 p.m. Eastern, it was hanging around $3.80 a share, and I said, you know what? It's not a buy because it's topped so many times in the 390s and 4, so that's going to be resistance. And what if this whole little uptrend fails? You know, this whole midday uptrend where there's support here at like 345, 340-ish. You know, at 380 when I was making the video, there was roughly 45 cents of downside and like 20 cents of upside. That's not good risk reward. So let me go to the SSS real quick. Where is it? All right, so let's do this. The ticker is NYMX, and we put 2 tickers here, just not so that you can necessarily compare 2 separate tickers, but sometimes you can compare the same ticker at different prices. So remember, this is not like a stationary thing. And if you're at all confused about the SSS, this is why I want you to finish the Trader Checklist DVD. Let me see. Let me go into the chat room. How many of you guys, write down how many chapters you've gotten through on the Trader Checklist. There's 14 chapters. So if you finished it right, 14. If you just started it right, like 1, 2, 3, 4, whatever. How many chapters have you watched? 14, 1, 4, 11, 2, 6, 7, 10, 4, 2, 8, 4, 11. So how many 14s? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 students have finished it so far. Oh, 11. That's exactly why I wanted to get it out. And again, we were trying to get it out. I was 13 students, 14 students. Now I think some of you guys are just telling me 14 because that's just what I want to hear. It's okay if you're just starting or if you're in the middle. I understand 11 hours takes a little while, so there's no pressure. But I highly encourage you to watch it. Hold on, let me just get a drink of water. One sec. And it's all right. Don't feel that I'm like, you're a failure if you don't finish it right away. I understand it takes time. Some of you guys are overwhelmed already with the video lessons and the intro stuff, but just try to make time. The sooner you finish Trader Checklist, you'll understand my webinars, my alerts, my video lessons going forward a lot better, because this is kind of like a new development that I think will help explain a lot of stuff. Because there was some confusion with NYMX when I was kind of ripping on it in here at the 380-ish, and then when I dip bought it in here in the 340s. So how can you rip on a stock and then buy the same stock, 20 minutes later? Well, the price has changed. So when the price changes, as you will see in a second, the SSS changes. So let's do NYMX at 380. And here is NYMX at 345 when I was trying to buy it. So the first price, the price in the pattern. Let's analyze it. Pretend that you don't know, what comes next after this drop off. Pretend you just see it in here at 380-ish. So it's holding near its highs, which is a good sign, but it also is topping out, rather consistently, I guess you would say, in the 390s. And then this topping couldn't even get to 390, let alone 396, let alone 408, let alone 4. So the afternoon spikes here at 380-ish, 390-ish are not as high as the morning spikes, just by a few cents, but that is going to make it tough for it to break out. So if it's not going to break out, it could break down, which is exactly what happened. So price and pattern. So intraday, the price and the pattern isn't very good at 380, but to judge fully the price and pattern, you don't just choose intraday. Daily chart, this is a tough pattern to come back from. It's down 50% off its highs. It does have a potential to spike. Where's the resistance here? What a surprise, in the 380s and 410s. Multi-month resistance. Let's go back even longer than 100 days. Let's go back 2 years. A lot of resistance in here at 395, 4-ish. So that is what that all-day resistance is. And you could have done this, you could have seen this before the drop. All you have to do is look back at the past. So conservatively, price and pattern, it can spike for multiple days, but there's resistance at 394-ish. So when the price is at 380, I'm going to give this a 7 out of 20. Risk reward, because there's resistance only 10 or 20 cents higher, and if it drops, pretend like you don't know what it's going to drop to. There is some support here at 367, some support here at 360, and a lot of support here in the 340s. So, obviously it does drop to the 340s, but we don't know that yet if we're going back in time and analyzing the stock at 380. I might probably try and guess that this morning support here at 350 would hold, if not 360. So between 20 and 30 cents of downside, we'll call it. As it turned out, there was 40 cents of downside, but we don't know that. So 20 to 30 cents of downside from $3.80 a share. And there's massive resistance at 390 and 4. So there's only 10 to 20 cents of upside and 20 to 30 cents of downside. That is not good risk reward. That is terrible. So I'm going to give it a 3 out of 20. It's not like terrible, like the worst, but it's pretty close. Ease of entry and exit. This stock trades very easily, so you can get out losing a penny or making a penny, very easily. So I'll give this a 10 out of 10. Past performance in history of spiking, it has had multiple days of spiking, but it hasn't really gone full supernova. So I'll give this a 6 out of 10. At what time is it? So at what time of day is it here at $3.80? It's like 3 p.m. So there's still an hour left in the market. So there's still some risk because, again, it cannot necessarily break out. So it could break down, which is actually what happened. So there's some risk there. So it's not necessarily the best time of day, but it is getting closer. I prefer to buy closer to the market close because that's safety. The stock is going to close, and then usually if I'm buying a stock into the market close, I want to see what it can do the next day. So there's no real reason for me to buy a stock at 3 p.m. Eastern. I'd rather buy it at 3:30 or 3:40 p.m. Eastern and reduce my risk. Personal schedule, this is going to be different for each of us, but for me, I have time to trade right now, this afternoon, and tomorrow morning. So it's not the best time of day, but my personal schedule is open, so I'll give this a 15 out of 20. Reason and catalyst, there is no reason. It's a speculative, weird little biotech, which isn't the worst, but it's not good, so it's a 3. Market environment, overall the market is down, and guess what? It's kind of scary right now for longs. So I'll give this a 3 out of 10. So it adds up to a 47 out of 100. That is not high enough to make me want to buy. I want to buy stocks that are 70 to 100. The higher, the better. So this is why I created the SSS, to give you these indicators so that you can see. But now let's judge it after it has dropped and when I did end up buying it, because I didn't even write out the SSS. I have no idea what this number is going to be. But I'll go over the indicators I saw when I was buying it. Over time, you will learn to internalize these indicators, and you'll have an idea. I have no idea what this number is going to be. I'm guessing it's going to be between like 70 and 80, if I had to guess. But I'm not going to lie to make it get there. I could be wrong. We'll see. So with NYMX here at 345, it technically broke the midday support here at 340, and it got down to like 337, but not by much. When you have these breakouts, like here was a breakout technically by 8 cents a share, but overall it wasn't enough because the stock is up, $1 a share. So an 8 cent a share breakout in this case is just kind of a double top. It doesn't count as a breakout. So breakouts, even though you want them to be perfect, like, okay, it's higher than the previous high, it's by definition a breakout. I want a convincing breakout. Otherwise, it's a double top. And here, even though technically it broke the midday lows by 3 or 4 cents a share, it was not convincing. So I actually thought that this was kind of a double bottom. And it actually dropped to the 330s not once but twice. So I thought that this was actually a pretty decent pattern. Remember, I already thought that it was going to morning spike tomorrow when I was thinking about buying it at 380, but the risk reward wasn't good. So I still think this can spike tomorrow when I'm buying it here in the 340s. In fact, I was trying to buy it at like 343 and 344, and it just wouldn't get down there. And I was running out of time because the market was closing. So I had to actually bid up to like 346 to 47, 48. So I was chasing it a little bit, which is sometimes a good sign because it shows, you're not just buying some bleeding stock that's, you're trying to catch a falling knife. So here, and it's up like a penny or two after hours, which is fine. But let's go back to this. So the pattern in the price. Before I gave it a 7 out of 20 because frankly, I thought it was overextended and it didn't have, the best price that I could get. It's the same pattern, whether I'm buying it at 345 or 380. There's just a big difference of roughly 35 cents a share. So the pattern in the price here has improved a little bit because my risk is less because I think that is double bottom. So now it's a 13 out of 20. My risk reward, this is the big game changer. This is what got me in because now I could still be wrong, right? Me buying it here in the 340s. What if it just keeps coming down? 340, 330, 320, 310. Well, I would cut losses if it got to like the 330s, because then it would not be bottoming, and that might be the end of this. So I risk losing roughly 10 cents a share. But if I'm right, I think it can get back to 390, which is a stretch, but I think that between this afternoon and maybe into a morning spike tomorrow, it can get to 390. Obviously, tomorrow, if it gets to 390, it could easily break out and slingshot past 410, 420. But I don't want to think of best case scenario. I want to think, okay, I think it can get back to 390 sometime today or tomorrow. So if it can get back to, and it didn't get back to 390, but that's just what I'm thinking so far. So if I'm buying it at, let's say 345, which is what I wanted to do, there's 45 cents of upside and 10 cents of downside, roughly 4-to-1 risk reward, which is good. And if somehow it gets back to 390 tomorrow, shorts will be scared. We've seen how quickly it can spike. Maybe it goes to 420. So there's really like 80 cents of downside, 80 cents of upside and only 10 cents of downside. So between 4 and 8-to-1 risk reward, that is superior. So now it has gone from a 3 to a 20. And that is the big change. Ease of entry and exit is the same because it's the same stock. Past performance, history of spiking is the same because it's the same stock. At what time of day is it? Personal schedule. This is going to improve a little bit because now it's closer to the end of the day, and that's much safer. I could still be wrong. It's not like a perfect 20. Reason catalyst is still the same, 3, and the market environment is still the same. So there we go. So we have this thing improving from a 47 to a 73. So it's not really like, oh my God, I have to be long this stock. It's such an amazing setup. But there is a clear difference in this SSS. And this is exactly why I released this formula. I'm so glad that it adds up to a 73. But frankly, I thought that's what it was. I thought that it was somewhere between like a 70 and an 80. The only things that have really changed, at what time of day is it, has gotten a little better. The risk reward has gotten tremendously better, and the pattern in the price has gotten a little better. But the risk reward is the difference maker here, going from 3 to 20. Does everybody see how I got that? Say yes or no. It's okay if the answer is no. You guys are too kind saying yes. I hope you really do mean yes, because it would mean the world to me. But this is exactly why I created this. So there was so much confusion where, how can you rip on a stock at one price and then buy it at another? Not much has changed. A lot has changed. Okay? The risk reward has changed. The setup has changed. Hold on, let me just get a drink of water. Crassy says, yes, but how can you make this calculation before price changes? I mean, I have been trading so long, I've internalized this. I created this formula inside out because I already do all this in my head pretty quickly, and then I had to kind of like deconstruct it and put it on paper. So if I can deconstruct it, you can definitely construct it. And it takes time, You need a better understanding of risk-reward. So risk-reward comes from where support and resistance is. So, with this stock, I'm thinking it's going to hold support here in the 340s, which it did so far. But I could easily be wrong. So if I'm wrong, what is my risk of being wrong? Well, if it breaks, the low here was like 337 or 339. If it breaks, somehow I'll get out at 335 and I'll lose 10 cents a share from my goal. Mind you, I bought it at 348. So when I am doing this this calculation, this is where I was looking at the stock, not actually where I got executed, although it's pretty much the same. But your risk is if you're long the stock, and if support gets taken out, what is your plan? So if it kept fading, I simply would have lost 10 cents a share. I would have cut losses, and I would have said, oh, I was wrong. The problem comes in when your risk is 10 cents a share and you don't stick to that, and you're like, well, I was wrong right now, but let me just give it more time. And you keep holding and you keep holding, and then it goes to 330 and then 320 and then 310, and you've just blown your risk margins to smithereens. And your reward is the potential upside. So I'm not cocky enough or confident enough to say that it's definitely going to break this 4 resistance, which was resistance all day. And I'm not confident enough to say that it's going to break this resistance from the afternoon at 390. So at 345, I'm going to say, even if it gets back to 390, that's probably as high as it's going to get. Now, in reality, as I mentioned, if it gets back to 390 tomorrow, it's probably going to break out because, it'll be a really nice morning spike. Now, I have no idea if that's going to happen, but that's what you can kind of speculate. So I would love to see this get back to 390 tomorrow and see what it can do. But that's your potential reward, $3.90. So I'm using the midday support and the afternoon resistance to guide me in, coming up with my risk reward. Risk is not whatever you decide it is. It's where there's support, So if I'm buying the stock at 380 and support is at 340, my risk is 40 cents a share. If I'm buying the stock at 345 and the risk is 335, 340, my risk is, 5 or 10 cents a share. Support doesn't change. In either case, the support had already been created by the midday drop. JK from Nova says, it fell so fast I couldn't sell without using a market order, so I froze. First of all, never use market orders. Second of all, don't freeze. When a stock drops quickly, you just have to learn to act quicker and react. How did I find NYMX? It was the single biggest percent gainer. Every single day I'm looking for big percent gainers. And yeah, right now I'm up 20 cents. I don't care about how it closed. I just did not want it to crash. Okay, whether it closed at 365 or 355 or 345 or 385, it's in a place where it can still morning spike tomorrow. That's all I want. I want to have a position overnight, first of all, so that, this lesson will be really useful for you guys under the PDT rule. As you'll see me trade with just 5,000 next year. I don't want to take a lot of new positions right at 9:30 in the morning. If I can, I'm going to try and buy the previous day so that it does not count as a day trade. What stock promoters do you recommend? I don't recommend any stock promoters. Stock promoters have become irrelevant. There's a reason why I never followed any specific stock promoters. I know Michael Good and Ting Brittani had their favorite promoters. Most of the promoters have sold off their email lists or portions of their email lists. So, your old favorite promoter might have a list that's in the hands of some crappy promoter that you don't even know about. Email lists get sold all the time. I don't sell my email lists because I'm not a promoter, but penny stock promoters trade and buy and sell their email lists. So nothing is what it once was with penny stock promoters. For me, it doesn't matter. I kind of anticipated this in the way that I've always taught is that I don't follow any promoters. I care about big percent gainers. So it doesn't matter what promoter or whoever is doing the buying and selling. All I'm interested in is trading volatile stocks. I will be starting with $5,000 on January 1st, correct. I will be prepared this year, or next year, in 2017. In 2016, I didn't make the plan quick enough, so I started on February 1st. If it drops after hours or pre-market to 330, will you sell or wait to the open? That's a tough question. Why would it drop to 330? Is it on volume of 2,000 shares? That wouldn't scare me. I might even actually average down. Is it on 100,000 shares with negative news? Then yes, I would cut losses quickly. For me, it's not just about what the stock price is, it's about how it got there. And that's very difficult for people to understand, but this is why I don't use stop losses. So you might have a stock that's, dropping to a key level, but if it's like KPTI the other day, where it dropped literally from like $9.80 pre-market to $9.01 pre-market on like 10,000 shares, no news, I saw that as a buying opportunity, and I was right. Same thing with MGT, buying into the pre-market panic. So some pre-market panics are able to be dip bought. If NYMX drops to 330 on 2 or 5,000 shares, I might just dip buy and double my position. I have a very small position. For intraday, I use 1-minute charts. Am I familiar with the good faith violation? Got me on Fidelity, says Edu Venezuela. I have no idea what a good faith violation is. I'm sorry. Call Fidelity and ask them. I'm focused purely on NYMX right now. Somebody else was asking some questions. Hold on one sec. Let me just get a drink of water. One sec, guys. Sorry. All right. Let's see. Question. Kazemi says, I'm very often on the right track, but I am too slow, scared, not sure to pull the trigger. How do I improve that? I find I am more right than wrong. I mean, it's a gradual process, Kazemi. Studying the past helps you more confident in the patterns. So how many of my video lessons have you watched? How many of my webinars and Michael Goods and Mark Crooks and Tim Grattani webinars? You are not lacking on archived footage. I will tell you that. No one else, no team else in the world provides as much content from proven millionaires as we do. So if you ask me, how do you get more confident to pull the trigger? You study. You over-prepare. You know these patterns inside and out. You understand the rules inside and out. You see the differences between different traders. You take some rules from different traders and you adapt them. All right. MD says, I feel like every scenario is different. OPTT news, the lesson learned from it, I feel is just one-time thing that the scenario, and can't say that will be for another stock. I mean, every stock is slightly different. You have variations, but I would disagree with you that one play does not lead any lessons to the next. Let's do OPTT real quick. NYMX is actually up a penny now. Someone's buying. So there's some solid buying in here. If we can get a little uptrend, I would be very happy. What was I going to do? Oh, the SSS. So now let's get rid of NYMX. If I just refresh it, it should wipe it out if we program this right. Ah, we did. So click refresh, and you don't have to delete any numbers or anything. It'll just refresh automatically. So let's do OPTT. When I bought it on Friday at $7.92. Let's go back in time. You can go back in time as long as you try to be honest with yourself. All right, so OPTT is a spike, a recent supernova, so I'm going to be watching it, even if it's not a percent gainer right now. I'm looking for follow-up spikes. I mean, it's already had 1, 2, 3, 4, 5, 6, 7 attempts at follow-up spikes. None of them have been successful, but that's not to say that it will always remain unsuccessful. When I bought it the other day, it actually had 2 green days, and it looked like it had support here, at like 760, 770-ish. I was dip buying it at 790-ish. Where was it? Right in here. And the previous day, even though the spike failed, I mean, it did spike intraday from 770 all the way up to 850 before coming down, and then even at the market open, it closed at 812, and it opened at 840. So it did have some spikeability in it. I was buying it in here. You can see the volume spike before I was buying. I don't just buy random stocks. The volume spike and the stock spike alerted me to the fact that there was a Navy deal. I kind of have a little advantage where I have more traders than probably anybody else in the world sending me just news and ideas, and I ignore the vast majority of it because most of it is junk. But with this one, 3 separate students sent me OPTT saying, you know what, this is a new Navy deal, and they linked the contract to the government website. And I took a look at it here in the 790s, and I thought, wait a minute, this could be a good opportunity, informational inefficiency, because you have this unannounced Navy deal, and that could lead to a press release. Normally, I don't like to guess news. Some people say, hey, Tim, I thought you didn't like to guess news. I don't like to guess news out of the blue. But when there's an announced government contract and there's no press release, the news has already happened. It's just a question if you're going to get a press release about it or not. So I bought this into the close, and I was up, I think I was up or down a penny a share over the weekend. The question was, could we get the press release? And if you got the press release the next week, then theoretically it would spike. And even if we did not get the press release, other, slow pokes and latecomers who maybe weren't around on a Friday afternoon to see the government website, they might be bidding it up in anticipation of a press release anyways. So I kind of had a little bit of a safety net where all I had to do was buy the stock into the close on a Friday. And I probably should have bought it like right into the close, but I also had kind of a crazy schedule with the conference. And so I bought it and actually made a video lesson on it, a live video, even though I didn't alert it. So the whole question was me holding it overnight. Why was it a good or decent trade? So I bought it at $7.92. The pattern and the price. So for me, I analyze all my trades, and I know that an $8 stock is a little above my pay grade. My sweet spot is really $2 to $5 stocks. $8 is a little out of my league. The pattern, though, is good. OPTT could spike, although you do have to be aware that these stocks, these supernovas, were spiking a lot better in July and August than they are in September. So you have to be aware of all that. So on a scale of 1 to 20, I would rate it a 13. Now, the risk-reward, this is the main reason why I bought. So I'm buying it at $7.90. If I'm wrong, somehow, where can I sell? Where do I choose to set my risk? Well, the day low here was like $7.83. And there was also support here before the spike started the day before at like $7.70. So at worst, I'm going to lose 10 to 20 cents a share. If there's no press release, if there's no morning spike, I'm out. I'm specifically buying it in the afternoon for a morning spike, which is no different than what I'm doing with NYMX. So, you aim for one specific pattern. If it doesn't play out, you get out. It's very good for me to do these kinds of trades because I know my goal, I know my timing, and there's no room for error. I would never just buy OPTT for a morning spike and then say, hey, let me just hold it another day. Why not? I don't want to change the plan mid-trade. So I'm like a sniper. I aim small, miss small. So on OPTT, if I'm wrong, buying it at 790-ish, and it could come down to 770 or 780, I'll lose 10 or 20 cents a share. I thought that with the press release, let's look at the longer one, the longer chart, 14 days. I mean, it spiked up here to 850, and then the spike here was 840. So, I don't know where it's going to top, and the spike here was like 870. So anywhere mid-8s, we'll call it. So if I want to be conservative, I'll say, okay, the spike might go up to 840. If I want to be aggressive, maybe it can go up to 870. But either way, there's between 50 and 80 cents a share of upside. So 50 to 80 cents a share of upside and 10 to 20 cents a share of downside along with the knowledge that this Navy contract has already been announced on a government website, so there's a little bit of an inefficiency. I'm not just buying, oh, there's a rumored Navy contract. There's a specific link that traders can go to and see and kind of be tempted by the potential of a press release. So risk reward, I would rate this an 18 out of 20 because there's more upside than downside, and the upside is likely given the news. Ease of entry and exit is not quite as liquid as NYMX, and there's some slippage. So if it starts dipping, I might have to lose 5 or 10 or even 15 cents a share before I can get out. So I'm going to give this a 5 out of 10. Past performance history of spiking, easily a 10, because if it starts going up, all the chat rooms, all the social media, all the traders start saying, hey, this could be today's low float runner. At what time is it personal schedule? So for this one, I'm aiming for a morning spike, and my personal schedule was that I'm doing the conference, but I was live trading to the conference, which means I'm wide open. So I will give this a 20. Reason and catalyst is a contract win. I mean, contract wins are good. It was only like a $300,000 win, so it's not like a $50 million contract. I'll give this a 5 out of 10. And then market environment, I was really unsure about this because I'm buying into a market that is kind of crashing. So I'm going to give this a 3 out of 10. So it's a 74 out of 100. So again, not anywhere near like a 90, 95 out of 100, but still within the range and worthwhile, mainly because of the risk reward and at what time of day is it? Aiming for the morning spike, which has been hot. So doing this over and over again on various plays is key. And then also I should mention, here is OPTT. Let me do this quick one. When I sold it at roughly 8:15 the next on that Monday morning. So let me analyze it real quick. Why did I sell? Why did I take profits? Well, the pattern in the price, so even when you're in the trade, you can use this SSS to see, what is the risk reward now? Because obviously the risk reward changes and the setup changes based on the new time. So pattern in price is still the same pattern. It's pretty much still the same price. So it's still a 13. But now the risk reward has changed because now Monday morning, yesterday morning, it was already up at like 8:15, 8:20 pre-market, so it was up a little bit, but there was no press release. That is very scary when there's no press release. And by the way, I'm watching NYMX. It's up a few cents after hours, 368 by 372. Even though the last trade was 365, there's a new buyer at 68. So if someone wants to sell, it's going to uptick a few cents a share. But anyways, OPTT, even though it's up pre-market, that's good. There's no press release like I wanted. So the situation has changed. Am I really going to wait another day for a potential press release? Am I going to try and guess that a press release is going to come out intraday? That's going to be tough. So the risk reward, and also, by the way, at 8:20, remember, no press release, but I thought even if you had a press release, it could only get up to 8:40. So no press release, and it's already gotten halfway to my goal. But now at 8:20, what if the stock drops? Again, I thought that there was going to be some support at 780 and 770. As it turned out, there was support at 770. So let's pretend that you don't know it's going to drop to 770, but let's pretend support will be at 780. There's 40 cents of downside, and even if a press release came out, I only thought that it could get to the 840. So there's 20 cents of upside and 40 cents of downside. Wait a minute. Why am I still long when the risk is double my potential reward? It's flipped. So now the risk reward is bad. It's gone from an 18 to a 3. Actually, I'll even call this a 2 because there's no press release. So with the risk reward here, I had favorable support and resistance lines along with the knowledge that a potential press release could come out. Now there is no press release and the support and resistance lines have turned against me. Ease of entry and exit has stayed the same. Past performance stays the same. What time of day is it? Now no longer am I aiming for a morning spike because now the morning has come and I sold, most of my position right at the market open, there was no morning spike. So now it's very, very different because I'm no longer aiming for the morning spike. It is past that. So now I'm aiming for a delayed morning spike, I guess. That is a lot more difficult. So now this has changed. I would give this a 5 out of 20. The reason in the catalyst, you could still have a press release, but it's dropped a little bit because it's tough to guess intraday press releases. So this is going to be a 3 out of 10. Market environment has stayed the same. So it has dropped from a 74 to a 41, even though the price has barely changed. So the price changing is not the only indicator here. This is the beauty of the SSS, where it can change based on the time of day and based on, your thesis playing out. Like if you go in expecting a press release at a certain time or a morning spike, expecting the morning spike at a certain time, and neither of them play out. So you have to adapt. Is this making sense? Say yes or no. I'm curious because I'm actually pleasantly surprised at how much sense it's making to me. Let me get a drink of water. One sec. Oh, God. Awesome, awesome. I know this is confusing. This is the first time anybody has ever taught stuff like this. So forgive me if this is like MS-DOS, beginning of the computer generation, or James Naismith when he first, introduces basketball. These are early, early days. And if you don't understand, it's okay too. I know some of you guys are just beginning, but I think you're going to also be pleasantly surprised after you study a lot of the DVDs and video lessons how well this sliding scale really helps. MD says, yeah, I get it, but how does that answer my question? What was your question? You said you wanted to know how this would affect different stocks and how OPTT might influence another stock. Well, next time, let's say this coming Friday, you have a stock that somehow gets, a Friday afternoon piece of news. Well, you can try and plug in the values. Every stock is going to have a different SSS, but you'll have similar setups. ISNS, the earnings winner on a Friday afternoon, was the exact replica of the TOPS Friday afternoon earnings winner. And my student Carrie actually, I keep forgetting whether it was a guy or a girl, Carrie. I think I said it was a she, but it's a he, or I said it was a he and it's a she. My student Carrie brought up the fact while I was traveling in Asia that ISNS was a duplicate of TOPS. So I'm not the only one. And they both were perfect morning spikers. So you need to learn that every single trade, every single setup can influence future setups. The Swede says, can I make an app for the SSS? This is the app. Just go to Profitly/SSS. And if you have any suggestions, we'll make improvements. This is the very beginning, but I don't want people using like 50 different apps. Just put it all at Profitly/SSS, and we'll have different versions and different stuff and different features eventually. And yes, I'm going to add the SSS numbers to my nightly watch list, but not when only 14 students have watched it. I've watched Trader Checklist because I already get a ton of questions, and I am not going to put myself in the position where people are like, what does this number mean? What does this number mean? And I'm going to have to send out so many more emails saying, watch this DVD, watch this DVD, watch this DVD. So I'm not going to add the numbers yet. I'm going to give people a little more time. It's only been like 2.5 weeks since I released the DVD. So maybe on like the 1 month anniversary. You can go to Profitly/SSS on your phones too. Please don't make outside apps. That's just going to confuse people. I want to keep it all on one website. I know you mean well, but confusion is my #1 enemy. Okay, and if people start creating different websites and different apps, there's going to be a whole lot of confusion. So trust me, I want to keep it all on one, Profitly/SSS for now. But we will build it out. I appreciate you trying. So anyways, my voice is dying. My throat is killing me. I'm sorry. I got to end this. I promise you next week I will do an extra hour on the webinar, and we can do a lot more SSS scenarios. Right now, NYMX is up a few cents a share after hours, so that's a good sign for me. We'll see if it morning spikes tomorrow. I don't need it to. If it doesn't, it's okay. I'm okay with it. It just really, a lot of the trades that I do, it's not even for big profits. It's just I knew that I was doing this Q&A, and it's good for me to show, why it's a good buy at a certain price and not a good buy at another price. I think that's going to really help you guys understand trading a lot better, where it's not just like, oh, I'm buying a good company, or I'm shorting a bad company. What is the price? What is the reason? What time of day is it? All of this stuff matters. So anyways, thank you guys again. I'm sorry again, but most of you guys have to watch all of Trader Checklist anyways, because everything I say right now isn't even making sense. So that is your homework, to finish the Trader Checklist guide and make my life a little easier and make your life easier. And Wyatt Earp just told me to drink whiskey, lemon, and honey. I don't know about that, Wyatt Earp. I'm not on the range, but thank you for the suggestion. I don't know. I'm going to try a whole bunch of stuff. Hopefully, I can get over this freaking thing. I'll see you guys in the chat room tomorrow. Thank you.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.